Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com, and welcome to today's morning call. So it is Wednesday, and we have a big day. And we have the Fed coming up at 2 o'clock. A lot of people think that they raised by a quarter point, and they shouldn't have done that. The street, or they're still saying that there's 3 or 4 more to go, and the street's pricing in none, basically. So it'll be interesting to see their comments. I don't think they changed things too much, because that'll take away and admit to what they basically did wrong. So anyway, we'll see what that does with the market closer to 2 o'clock. As far as this morning, a little sooner than that, we have the oil inventories. Yesterday, after the close around 4:30, there was a preview of that, and there was a bigger build, and oil got pressured right away. And basically, it's going to be flirting with 30 again. So we're going to have to watch that. And then, you had Apple earnings, which weren't horrendous, but Tim Cook's statements about what's going on around the world were pretty disheartening, especially if you're a realist thinking about growth slowing. So anyway, in China, you had the Shanghai couldn't really bounce off another 0.5%, but the Nikkei did better, and so did the Hang Seng. And in Europe, it's off small, but there's nothing making new threshold lows. So when you don't make new threshold lows, things don't get too chaotic here. So if you look at the chart of our SPX, you will see that this market is still trying to muster a bounce above the reversal from last Wednesday. This was that reversal low. Remember, it took out the double bottom here, stopped guys out, did a little red dog reversal, held higher, and now it's basically holding higher again. Okay, we come into this meeting with a lot of unknowns, the Fed meeting today and oil. The question is that I know I'm trying to think about is, can we get a trade through this spot? This spot right now, which is at least it's defined, is 1906. If you can get a trade through this today, okay, basically you probably get some shorts to get squeezed, and then some people thinking that we get to the 21-day start to pile in as we're still well below, levels that were broken earlier this year. So the question is, do we even have enough strength to push through? And if we push through, can we hold to get a bigger bounce from the Wednesday's lows? Or, if you look over here, does it create some kind of topping tail where you push through a major level like you did here and fail? Push through, squeeze shorts, get some people to chase, then close back below, and then you get a down move. So we'll see what happens into this spot. If we don't even have enough power to get above this today, chances are I will be pretty flat and might be leaning short if we get a move below this 1875. Then you have 1848, and then you have those lows. So an inside range here that we're trying to figure out what's next. But overall, again, you look at the macro pattern here, okay, of the SPX with all of the doom and gloom around the world and all the craziness in oil and craziness just with the slowdowns. We're still hanging above this big support area. So the question is, how long can you do that with everything else falling apart around you? And so that's why, on the micro, maybe we get some kind of squeeze a little bit higher, but on the macro or intermediate, you still have this, big head and shoulders pattern, that is just trying to hold support, that if it were to break, you then have, lower prices below. You have the 1770, and then you have some levels of interest in the 1600s. But ultimately, I've seen this and I've shown a few different times. If you look all the way back here, the real support comes in around 1576, which would be a retest of the double top that got taken out, and that would be almost a measured move from 2100 to 1800. That's about 300 points or so, or just 1820 or 1860, wherever you do the neckline, and that brings you all the way down to here. So just take care on a long-term basis. Short-term, you better be on your toes. So what we do is we look for clues from sectors to figure out what's next. Yesterday, the market was up 230 points or so, but it felt, or maybe even more than that, it felt weird. You had high beta tech, off. You had some obscure Dow stocks up, not obscure, but like Triple M. You had Boeing, but meanwhile Boeing's down now. So anyway, let's look across some sectors. The IWMs. Look what happened, by the way, when this triggered its head and shoulders top right around here. Okay, here's our left shoulder, the head, the right shoulder below all the moving averages. And it's trying to bounce off some big support. But if the market doesn't bounce and takes another leg lower, this could come back down to here. So we got to make sure that you know what's cooking. As far as on a micro basis, which we'll get to right now, it's trying to hold this lower pivot. Now, I do have some IWMs left over from yesterday overnight because I'm thinking the same type of thing. I trade for cash flow, I trade for alpha, and at this point, you still have your reversal low, and then another higher low, and then there's a question that perhaps this gets taken out to retrace to the 21-day. So who knows if that's going to happen. So for me, I'll stay in it. If it were to break and close below 99.18, I'll be out. If the market goes green and the Russell tries to lead a little bit today, maybe I add for a push and then sell some and figure out. But we'll see what happens there with the Russell. The IBBs were weaker yesterday because of people saying maybe because of the Democratic debate, talking about the fluff and the obsessive costs in bios, etc. So it's still in this little range. Here's when your ascending channel broke. It's still very broken. I guess I'm out of it, but maybe it tries to go green today. If not, if it breaks this, this too could see a lot lower prices. On this, just look how these trends break, guys. Follow trends. Don't follow analysts. This ascending channel broke to the downside, ascending channel broke to the downside, ascending channel broke to the downside, and now all we're doing is really hovering on some pretty big support. And if we take another leg lower, chances are these bios are going to be down to 240. So that's why everyone's on their toes. Yesterday, I actually bought a bank for the first time in weeks. JP Morgan thinking we get some kind of bounce for a day or so ahead of the Fed just in case, and it worked a little bit. The XLF has been battered and bruised, and as an investment, you shouldn't have any banks once it went and traded and stayed below the 200-day and especially broke support. But now, it's coming, came into some big support and it's trying to hold, and it's very extended to the downside. So I figured, why not try yesterday a little bit just in case the market does try and muster up some kind of bounce. But at this point, I'm going to keep it tight. If it were to get above this, maybe there's a little bit of a push. Maybe they still talk a little hawkish versus so dovish, like everyone says at 2 o'clock. I went with JP Morgan. It's not a great looking pattern, but I'm not stuck in it like some other people. You could have sold JP Morgan when it broke its trend here and had that big gap down to start the year and then stayed below the 200-day. Now it's a little bit off the lows. Had a little bit of power yesterday. Maybe it goes from red this morning to green. So I'll add a little bit this morning. Goes green, trade out of it. Maybe it takes this out and leads the banks a little bit up, either pre-Fed or post-Fed. I'm not sure, but I'm going to keep it tight because these names are very broken. If you want to keep your eyes on Goldman also, it's been very broken. You could, if you're long from yesterday thinking you were getting a little bit more than a half a day, use this as your stop, and then perhaps if the banks want to push a little bit for some reason, this would be the pivot, and then this would be bigger resistance. But it's hard to tell if that's going to be the case. So 156.10 is that resistance, and then again, just to show you how to react, look when this broke to 200. That was 190. You could have saved yourself almost 40 points. And that's that's the macro rule, not even the micro. Then the big story again is Apple after the close yesterday. First time, or maybe not first time. I think in the last year I've not taken many different types of options into it because I've had a pretty neutral thesis on it the way it's been acting. And they came in the report. Everyone was lowering and lowering and lowering their iPhone numbers, and the report came in not horrendous compared to what people were thinking. But in the conference call, Tim Cook gave a pretty gloomy outlook on what's going around the world. So, if you want to take that to heart, I think you should, because it's the biggest company out there with the widest, fingertips. So, again, not saying that should get you overly bearish, but, put that in the back of your mind. Considering that the S&P is only 12% or less off the highs, historic highs, when most other places are down 30, 40% or more, and stocks might be even down 60, 70%. But anyway, the options guys are pricing in a 6% move. It's down 4% this morning. So on a short-term basis, Apple's down about 4%, like I just said. So you'll see how it acts today. There's some pretty big support coming in right here. It's already below this prior pivot. So I would say if Apple stays below 98, it's not worth your time whatsoever. If it happens to get down towards this 95, that would be almost 6%, so maybe the option guys try and hold it, but we'll see what happens. Do we have another hold? Look what happened the last time after earnings. The This was, let's see, where was the last earnings hole? The last earnings hole was, yeah, two of them actually. This was this earnings hole that created a really big move lower to the downside when it never got filled. And then I'm not sure if this was the last one. That was August. This might have been. Anyway, another hole. But P.S. This is where we are now. So with that being said, you know, the head and shoulders pattern that we've gone over many times, which is usually a longer term pattern, you know, gave you some clues besides the shorter term that, you know, there is some problems out there. And if that's your left shoulder, if that's your head, and this is your right shoulder, and some say this was the neckline that it broke right here, it never got up to retest it. So 130 down to about, just say 100, just say even 100, it could be 105, so just say that's 25 points. 25 points gets you to about 80. So if we're going to head lower, this can give you clues, so just take care of blindly buying Apple, because this overall macro pattern says at some point it could see 80, and that would probably mean, you know, technology's under pressure, and probably mean 1812 in the S&P didn't hold. So, you know, you just think about things when you try and line them up in your head. As far as other high beta, a lot of guys actually made money short Netflix yesterday. Netflix has been in a downtrend on earnings, which were pretty good. It failed at that 116. I remember in the recap, I'm like, if it fails at 116, you shouldn't be long, maybe get short. And then yesterday you had another quick little short there, which I actually did too. Wasn't the easiest thing in the world, at least for me, because I'm not the greatest short. But here is basically, you go this, look at this outside day right there. Here's when it lost the 8 and 21 day. You could almost draw this like this. And then really, if, you know, after earnings, when after hours it couldn't get above and stay above this spot, that was your sell signal, and it's, you know, hasn't done much since, and now it's actually below the 200 day, and we'll see how long it stays below the 200 day. And if things start to get weaker, you know, this is your next point of reference in Netflix. It's not acting well whatsoever. Facebook today is after the close. I don't know, you know, at this point, I'm not sure what could happen here. This is probably the most bearish looking technical setup I've seen going into Facebook. The last two, it looked like it was ready to explode to new highs, and they still even had a problem doing that. I don't know if Facebook could save high beta tech, but we'll see what happens after the earnings. At this point, there's been a lot of distribution, and it is an expensive stock, so it's going to have to be really good for it to continue. So, you know, if you look at the chart, you'll see also with Facebook that you have the, you know, a little bit of a head and shoulders top pattern starting to build here too, where you have your left shoulder, you have your head, and then this could be, you know, a semi-right shoulder right here, either into right there, or maybe it can go a little higher, I don't know, with this being, you know, your neckline. So if that's the case, think about, you know, where Facebook came from. It's come a long way, and I know it's still kind of in its infancy, but just be careful. If you own it from when we were talking about it with this cup and handle pattern way back when, you know, when I did that whole segment with Kramer, and you bought it here, or you bought it after earnings, or you bought it wherever, you know, it's come a long way. And big support, really, you know, and it's getting close to that 200 day, so be careful. This upper pivot broke. That's when the 8 and 21 they gave way. That's when momentum guys stopped holding it as a swing trade, because I had it a lot of times as a swing trade above the 8 and 21 day. We're here, so we'll see what happens. So I would, you know, if you know, I'm not a, you know, I don't know exactly long-term strategies you should use, but if you own the stock from just say 30, maybe you put a collar on it. What's a collar mean? You know, you sell calls to fund puts just in case something horrendous happens. If you're okay with it and you're just going to hold through and you think you're going to be in Facebook the next, you know, 2, 3, 4 years and do whatever you want. Short-term trading, I'm not going to be in it. You know, if you look at the chart again, short-term, just like yesterday, we made some good money in Apple yesterday, both long and short after hours. You want to have defined levels, and right now in Facebook, you have, you know, this being one defined spot of resistance, which is close to, what is this? This is right about 150 or 101, and then you have another big level right around here. So this would be like resistance 1, resistance 2, and if you know, if they talked about a lot of expenses, I know they talked about not charging anymore for WhatsApp. That could hurt. You have, so I wouldn't even say this is support 1. It's too close. Really, like this 93-ish area is support 1, and then here's support 2. So I'd be taking a little care. Like Netflix is, to me, was sort of similar. You know, decent setup, a little technically broken, very solid report, beat on a few spots, and it couldn't rally. So, Facebook's going to have to be blockbuster to be able to go up and hold up, but we shall see. And that's really it. The metals have been acting better. I know a lot of guys have been trying to stay long those for the first time in a while. It reclaimed the 8 and the 21 day and has been trending up. It actually cleared this this prior pivot, which if you added to it, that's great. Some guys did. This is when we were going over it in the VTF. Some guys stayed with it long. I know, actually, right here. I know for me, that happened before that happened. But anyway, here's a 200-day. So we'll see what happens. It's off a little bit today. It'd be probably constructive to not give back all of yesterday. So holding about 106 and a quarter. And I think the gold guys who've been stuck in this gold for such a long downtrend, if you put it in perspective, it still hasn't done much. It's still major downtrend, nothing's really changed. And I haven't shown you this chart in gold in a while, but remember when we were talking about saying get out of Dodge, if you look back at big supports that break, look at the size of this support that broke at 1500. Besides the overall trend that broke into this wedge pattern right here. And what else happened? Lost a 200-day. So sell signal, still caught in this downtrend, but a little bit of a rally. We'll see if this downtrend changes and you get some kind of real lift. And for that to happen, it's going to have to take back the 200-day with potency, not just touching it, trade through a little bit, touching it, trade through a little bit. So don't get too excited here, except for if you had money parked here in January versus some other things, you probably did a little bit better. So in closing, I think today's an important day. Typically you get some kind of crazy erratic action both ways, which makes it tough. Last hour you get some kind of trending move. I don't know if we're going to have enough strength to push through the wedge resistance in the S&P or the spiders and some of those other sectors. We might push through it, squeeze everyone, and then if we come back below and create a topping tail, that could be your sell signal. If we push through and hold above it, that must mean oil held 30, Apple's off lows, and financials are okay, and they must have whatever it did. Then maybe you get that 193, 195, and if we don't even have enough strength at all to even get there, and we start breaking below 187.50 and close below it, I would take risk back off then, because the lows that we put in last week could be revisited sooner than anyone would have thought. And tonight I have a webinar, 2 of them actually at 5:30 for those who trade the markets, and want to do it right after the close. And then I have one at 7:30 for those that work away from the markets and might have to get home, feed the kids, and get ready and want to watch and learn a few different type of tactics on how to be out of the way and embrace volatility, so you could benefit from the dislocations versus being caught in it and frustrated. So take the time. It's a free webinar. It'll be like an hour. I'll answer a lot of questions, and hopefully I'll see you then. Have a great day trading, and I'll also see you on the VTF. Bye-bye.